Hi dear traders, the risk of sentiment returned to the financial market. Late in the week, inflation data in the US showed that consumer prices are hardly slowing down, although the Fed keeps taking aggressive steps. The regulator intends to hike the rate by 75 basis points at its next meetings. Investors' worries also intensified as the Michigan Consumer Sentiment Report revealed that consumers doubt inflation will ease and expect it to accelerate further. On the back of rising inflationary pressures, the US dollar is gaining ground. The US dollar index, which demonstrates its value against the basket of 6 major currencies, returned to the area of 113. The Australian and New Zealand dollars depreciated the most against their American counterpart. Over the past week, the greenback gained around 0.5%. Meanwhile, the most traded pair on forex, the euro-dollar pair, failed to stay in the bull market and slipped to the 20-year low. Market participants are convinced that the European Central Bank will keep raising the rate at the meetings in October and December. However, the economic outlook for the European economy is very bleak compared to the US, which makes the euro less attractive to investors. The British pound is also being re-estimated in the foreign exchange market. The new Prime Minister failed to restore investors' confidence in the UK assets even despite declaring a corporate tax hike next year. Yet the pound is depreciating with every news from the political front. Besides, the reduction of borrowing funds also weighs on the UK currency. In parallel, the governor of the Bank of England is trying to tackle extremely high inflation, having no illusions about its slowdown. Apparently, the UK regulator will continue to hike the rate. The dollar-yen pair has closely approached to the level of 149, testing the patience of the Japanese monetary authorities. Will the Bank of Japan intervene again, or will it be watching the currency lose value? Last month, the Japanese regulator made an intervention of the biggest volume on record. Yet we can see that these measures are being offset. According to some estimates, the Bank of Japan can do no more than 4 to 6 interventions of such a scale. In the meantime, the risk of sentiment has had no effect on gold. Investors still prefer to stay with US government bonds with a short maturity, which has already caused an inversion on the yield curve when the 2-year yield rose above the 10-year yield. So the price of the precious metal dropped by 3.2% to $1,640 per troy ounce. The sentiment of oil traders is no longer bullish. Thus, Brent crude fell below the level of $92 per barrel by the end of the weekly session. Oil is pressured by the looming recession, which inevitably means lower energy consumption. This is what the members of the OPEC Plus grouping seem to be worried about, as they cut oil output by 2 million barrels per day. Friday's data from China revealing slower economic growth and industrial production confirmed that fears of a lower oil demand are getting real. These are the trends of the last trading week, and now a new week is going to bring a new portion of macroeconomic events. Stay tuned to be always in touch with the latest market news. See you!